So today I'll be teaching you my own personal entry model and my own fucking strategy on how I tackle the markets, and I'll be dissecting my entire strategy from all the way from A to more fucking Z for you to make it simple for you guys. Alright? Now, usually I'll start my day, I'll go on the daily chart on NASDAQ. Disclaimer, I only trade NASDAQ and I trade the New York session. So this strategy is quite applicable for NASDAQ, but I'm not quite sure if it's applicable to other pairings. I never quite used it for other pairings. So how I would see is, okay, I took a trade on the 26th of March, and I'll usually look at the previous day candle if it closes bullish or bearish. So in this case, the previous day it closed quite bearish. So that was one confluence. Another confluence I saw was this previous high here. Price on the 21st of March tried to close above this area. It did not close. All right, it did not. It's not a break of structure. All right, it didn't break. So this is still counted invalid. So price came down, tried to retest this area, still failed. This is my second confluence why I should sell. So let's go to the H1 chart. That was one confluence there. Alright, another confluence. Now we're going down to the smaller time frames here. Alright, smaller time frames here. I would mark out previous highs. I could say previous highs here, previous market highs here. We can see that, previous market high was here, another previous market high was here, but I'll mark one out here first. All right, so we saw that price came in this previous market high here, but we don't sell yet. We go down to M5. Okay, go down to M5. We saw that price reached this area, came down, but what do we see here? Huge pool of resting liquidity. Why is that so? Because this whole move up was during the London session, and once price hit this certain resistance, which we can see it was the previous high, price doesn't have enough liquidity in the market to move it up or down. So price is just more fucking, it's stuck there. It's stuck there. So that's one good area we could look at. So price, let's mark out market open. Alright, it's here. Okay, market open was here, New York session. For me, it's 9 p.m. So we wait for price to rally up into this area, retest this area again before enter, retest. And what can we call this, ladies and gentlemen? Any guesses in the chat? Any guesses? Call this a more of an order block. An order block here. Another confluence. Order block here. Price couldn't pierce through. Order block there. Okay? We saw an order block here. Now we go down for M1 to enter our trade. Some people are gonna fucking hate me that I use M1, but like shit, if it works for me, it should work for you. Don't hate the player, hate the game. Alright, so come down here. You saw price came into this order block, huge rejection down here. Okay, impulse, very impulse move down. What can we identify during impulse moves down? Fair value gaps. Okay, one very, very crucial fair value gap I saw was this. We create a lot of low wicks here, which this fair value gap would have relatively higher probability of hitting better so-called liquidity in that area. So I would enter a sell when price enters here, right here. So my entry would be short position would be once touched. My SL would be on previous highs here. My stops be up at the high there, and my TP go down to H1. Shit, fuck, it's gone. Oh shit. My H1, I'll go down and I'll grab previous lows either here or previous lows here. You can see that. So let's see how it played out here. It played out pretty well. This would be like a 1-to-2 risk to reward ratio type thing. Usually I take 1-to-2 RR type trade. So I entered here last night, which my trade is actually still running right now. Shit, let me show you. It's on my I didn't exit. Trade running right now. So SL here, my model usually we don't really go into drawdown as much, so I'm not that stressed. So yeah, very simple 1-to-2 risk to reward ratio type thing. So I mean, there isn't really much, that we could do, but usually these high probability setups don't come very often. But when it does, it's a very great execution opportunity. I hope I'm not speaking too fast and shit. So like, this is basically my whole entry model, and next few videos I think I'll go in more shallower beginner type thing, because I think this is a bit too heavy. But I just want to put it out there on like, that how my entry model works, and like I'm not a fucking foo mentor and shit. That I want to show that my shit really works, you know what I mean? So I'm here to teach you guys step by step on how I enter the model. But firstly, I would like to make simpler videos after this to have you have a grasp of what the fuck is going on. This shit is fucking hard and shit. I'll make simpler videos, how to identify highs, liquidity sweeps, how to identify order blocks, fair value gaps, how to set your SL. That's the most important risk management. Don't fucking over leverage that shit. SL, TP, and that's it. But for now, I just want to put it out there how my own entry model works, and I hope more advanced traders that watch this will give me maybe some few pointers, or maybe you gain something from this video. But thank you very much for watching, and I hope to see you soon. Join the motherfucking Discord, alright? I got some crypto gems in there, type shit. See you soon.